Good morning and welcome to this weekly market update from MRC Markets. Today is the 1st of October 2012. What we'll do today is go through the main forex pairs and gold. So we're going to go through Euro dollar, cable, dollar Swiss, Aussie dollar. Just trying to give some sort of weekly outlook into the markets. We'll also review a bit of price action from last week, but it's mostly be technical analysis. We won't focus too much on the fundamentals, although we will go through the forex calendar at the end of the video. For any new followers, we have 3 moving averages in each of these charts. The red one is a 55 simple, purple is 100 simple, and the gold is a 200 simple moving average. We're not going to make any trade calls recommendations in this video. You trade at your own risk. You could please read our full disclaimer on our website www.mrcmarkets.com. Okay, let's have a look at the Euro dollar chart. This is the weekly. Won't dwell on it too much, but just to give some sort of a broader outlook. On this weekly, it's all about this downtrend resistance, in my opinion. That's still holding. The last couple of weeks, we've had some bearish candles come in, right off this trend line, and also off this 55-week moving average as well. So we are starting to sell off a bit after the 6 bullish weekly candles there. We spoke about the last couple of weeks. Expect some sort of retracement after such a strong move upwards, and that's what we've got. We've got 2 retracement candles in a row. Nothing massively drastic in terms of these retracement candles, but they are coming down and pushing the price lower. But yeah, that's all I'm really focused on this weekly, to be honest. I mean, we had the big support down here, which is now obviously held, and we're popping back up, but that's all I'm really focused on in terms of the weekly. Let's look at the shorter term time frames, and the daily chart is a very interesting chart. We spoke about it last week, about this 200-day moving average, and we're pretty much testing this at the minute, and we're starting to get bounced to the upside. So keep an eye on that, and we also do have trendline support as well. I mean, you could bring it in a bit and say it's pretty much testing at the minute. I mean, if you flip it to the line chart, we haven't had a close below that, so you can see that much clearer. So some people have that trendline support on their charts. You can see we are bouncing off that at the minute with the confluence of the 200-day moving average. Also, some fib players will be looking at the recent bounce off this trend line here. So if you drop from the lows to the highs, any sort of buying opportunities, and you can see we're sitting on the 50% Fibonacci retracement level as well. So a nice dip buying opportunity. You can see that the euro is already reacting to that price action. So yeah, I mean, in terms of going through the week, I mean, I would keep it on this chart for the longer term perspective. I mean, if you flip it to the if you flip it to the hourly chart, some people will be selling into any sort of bounce which you're getting now off that recent swing high. If you put it to the swing low, and then the 50% fib retracement comes in at one spot, 28.81. So keep an eye on that, and it also coincides with the 55-hour moving average. If you look at a shorter term time frame, that's the fib that I keep up. But no, very interesting chart, very technical chart. Looking like it is starting to bounce up a bit now after the retracement that we've had the last couple of weeks. So there's still some anti-dollar sentiment out there in the markets, but no, interesting chart, euro. Let's have a look at the cable on the weekly. You have to keep this in mind every week. The trendline support there, and you also have the trendline resistance. It's fallen a nice sort of triangular formation on this weekly chart. We've broken above the main moving averages now, so the odds are that it's looking like it's going to want to come up and test this upside trend line on this weekly chart. I mean, in terms of last week, we had a bearish candle, a sort of retracement candle, similar to euro. We said after the sort of 7 bullish weekly candles, expect some sort of retracement, and that's what we've had in the market. So if we do get any further retracement on this weekly chart, then keep an eye on the 100-week moving average there. It's starting to flatten out, as you can see on euro dollar. When you get a flat moving average, they do tend to act as good supports. Let's flip it to a shorter term time frame. You can see we have a nice trendline support here on this cable chart, and you could bring it in a little bit and say it's pretty much testing it as we speak. Similar to Euro, we're getting a nice bounce. So in terms of the recent fibs off this spike here, nothing massively of interest. It hasn't come down to test at 50%. It may have tested the 38.2. We don't really focus that on these webinars. But no, it's very similar to, I mean, in terms of the shorter term time frames, looking any short term sellers looking at, they will be looking at this recent fib here on the 1 hour chart from the swing highs down to the swing low to 50%. Very similar to Euro, this chart. If you flip it to that Euro chart there, from swing high to swing low, the 55 hour moving average coincides at 50% Fibonacci retracement. Very similar to cable, 50% fib coincides with the 55 hour moving average there as well. So if we do get any pop up, any further pop up, then keep an eye out on that. That's how I'd have my chart set up for this week. Look at the dollar Swiss on the weekly. Only thing of real interest is a 55 week moving average. We start to get a bounce off of that now. You can see the weekly moving average do react very nicely on these charts. You can see a 100 week moving average there capped well, and you can see around here the 55 reacted well around there as well. In terms of shorter term time frames, we have downtrend resistance here, a sort of mirror image to Euro. You can see that's pretty much holding as we speak, so we're starting to sell off, and also that 200-day moving average there. It's sitting right on that at the minute. It's starting to break. It's actually broken below now, so could be acting as a nice ceiling there on the dollar Swiss. For any short-term buyers, you can either play the fib from the complete lows there to the highs. We're still a long way away from that in terms of 50%, or any shorter-term players. I say you can also see a 55 bar moving average there on this 4 hour, how well it's supported around there last week. Literally to the pip there, nice spike and popped up. Any shorter term players who are looking for any buy opportunities, I'll be looking at this fib here, which also coincides with that 55 hour moving average. The recent swing low there to the highs, nice fib play there. Keep an eye on that if we do get any further sell off on this dollar Swiss. In terms of the Aussie on the weekly, still in a clear uptrend. And in terms of the moving average, you can see the 55 and the 100 are acting as nice cushion support here. Just shy of bouncing off it here, but we are starting to get a slight pop up now, so that's all I'll be focused on really on this weekly. Actually, no, we do have a solid trendline support there, which is technically holding, so interesting chart there on the Aussie. Keep an eye out on that. In terms of the daily, let's just tie this up a bit. In terms of daily, 200 day moving averages acts as solid support there, and as well the 100 day moving average, so keep an eye on these. They are reacting very well in terms of the price action off these moving averages. You see we're starting to get pop up today already. In terms of the fibs, I've got this recent swing from the lows to the highs. You can see that 61.8 retracement is acting as good support there at the one spot 0.339 level. If you flip it to the 4, you can see it's clearer price action there, and there's great support previously there. It's a previous support, and it coincided with this fib level here. So very nice chart there. I really would just keep it on that. To be honest with you, it looks like it's in a sort of bullish pattern. It looks it could follow throughout the week. I mean, you can see that clear support there if you just draw it from there to there. A clear support line, 3 clear points, and it's bouncing up. But also you have that confidence with the sort of fib level there. If we do get any pop up on this 4 hour chart, and keep an eye out on that 100, the 200 day moving average there. If you look at even shorter time frame, people will be looking at certain selling opportunities there from the recent swing high, similar to Euro and cable. Recent swing high to the low there. We'll be looking at some sort of 50% retracement, which kind of coincides with the 100 hour moving average there. But I keep it the biggest perspective. It looks like it wants to pop up this week, in my opinion, but keep an eye on that. That's done for the forex. Let's have a look at gold. We've had a lot of strength in gold these last few weeks since we've broken out of that tight range and off this trendline support and above that 55 week moving average. We are literally flying now, but we are testing a resistance here to the left here, which is at around the 1770 level key resistance, which is holding, so bear that in mind just sticking that up for you there. Key resistance there, which is holding. But I mean, you can see that in terms of the candlestick patterns, last couple of weeks we have had a lot of lower wick there, which is indicating that the buyers are still in this market and want to keep this trend going towards the upside. In terms of the daily, we're still a long way away from the moving averages, so if it does want to retrace, then keep an eye on that 55-day moving average there. We're still a long way away from that. In terms of the 4-hour, we have a trend line support up here. You could bring that in a little bit, and then that coincides. You can see the 100 bar moving average on this 4-hour chart. So a lot of dip buying opportunities there. You can see if it comes down, test the trend line support, and keep an eye on that. See how it reacts. Okay, and that's done for the charts. Let's have a look at the Forex calendar. A lot of mid-tier data out today, although the high impact news out of the day to start off with is the UK manufacturing PMI data, expected at 49.5. Similar, the previous number was 49.5 as well. At 3 o'clock, big piece of economic data here, the US ISM manufacturing PMI. That's expected at 49.8 from the previous 49.6. A lot of people will be looking at to see if that comes above 50. That's the key level that people look out for on that ISM number. Tomorrow we have some Aussie data out in the Asia session. At 9:30, some more UK data. The construction PMI forecast at 50.0 from a better number from the previous 49.0. On Wednesday, there's some more Aussie data, the trade balance at 2:30 a.m. 9:30, more UK data, this UK services PMI, forecast at 53.1 from the previous 53.7. And at 1:15, ADP non-farm employment change numbers, forecast at 148,000 from the previous 201,000. So a big drop in those non-farm numbers we're expecting there. And at 3 o'clock, we have the ISM non-manufacturing PMI. Expected 53.4 from the previous 53.7. On Thursday, we have some more Aussie data in the Asia session. At 12 o'clock, we have the big piece of UK data. We have asset purchase facilities, which is expected to stay the same there, and the official bank rate keeping interest rates low, expected there. And of course, we have MPC rate statement, which follows that news. And also, in the afternoon, we have a similar thing from the ECB. So we have their minimum bid rate numbers come out, which is still expected to stay the same at 0.75%. And ECB press conference, which follows that, what will Draghi be saying about interest rates. At 1:30 on Thursday, we have the weekly jobless claims, 371,000 from the previous 359,000. We have some Canadian data at 3 o'clock. And on Friday's a big day. First of all, we have a lot of Japanese data overnight, but of course on Friday we have US non-farm employment change numbers expected out of the same time every month at 1:30. So it's forecast at 111,000 from the previous 96,000. They will be heavily focused on, especially just before these elections as well. They'll be in the limelight, and of course it comes at the same time as the US unemployment rate. That's expected to come up from the previous 8.1%. It's expected to come to at 8.2%. Okay, then that's all for this week. A lot of data out this week, so keep an eye out. There will be a lot of liquidity in the markets, potential, a lot of volatility as well, so keep it tight, be careful. Be a lot of opportunity to make some good pips this week. So yeah, I hope you enjoyed that video. Have a great week trading, and I'll catch you next week. Thanks for listening.